So hello everyone and welcome to another video of my YouTube channel. Now this video has been one of the videos that everyone has been waiting for. I'm going to tell you about Zomato from a long-term point of view, what you have to be doing with Zomato. Well, so let me start up with the disclaimers. Anything that I tell you on the video is just for knowledge purposes. Please don't take any of these as your investment advices. So firstly, let's understand how actually Zomato works or how their business model really works. Now Zomato do the back end work for the restaurants of delivering the food and e-commerce part of it. So delivering food and the e-commerce part of it is the main business of Zomato, and they have a lot of side businesses like say they have acquired Blinkit. Now what does Blinkit do? Blinkit delivers groceries to doorstep, and they have another business in Zomato itself called as Hyperpure. Now what does Hyperpure do? So the Hyperpure literally delivers the grocery part, or basically whatever the restaurant need in bulk, like groceries and etc., they provide to them in bulk. So this is what really Hyperpure does. So let's start up with their IPO and valuation. Their IPO was launched somewhere in 2021, and there was a lot of talk about it being very overvalued, and I'll tell my point of view in this video. So their valuation when the IPO launched was around $5 billion, and the Swiggy, their rival at that point of view, was said to have half of their valuation. That means they were around $2.5 billion odd. And the latest valuation of Swiggy has come out to be say $10 billion. That is almost twice the size of Zomato. And what this literally tells you about both of the companies is the valuation part of it, or valuing a company is a very tricky part, and it literally can't be done very accurately at this point of time. Directly, let's jump onto the fundamental analysis point of this Zomato. Now their market cap is around 53,000 crores and their current price is around 62 rupees, and they have reached a high of say around 169 rupees when the past year 2021, and their lowest has been around 40 rupees odd. That is where the lowest of the market was seen. What you have to see here is their operating profits. Their operating profits in 2020 was around minus 25%, and then it went up to till 50 odd percent in the quarter of September 2021, but after that it has been coming down slightly. So they have been concentrating on the operating margin point of view, now I can say. And if you again go to the net profit, their profits have been say somewhat been improving over the span of time after reaching minus 291 crores again in the September 2021 quarter. Now if we go to the profit and loss, the sales have been gradually increasing. They have been increasing really well, but has their expenses been proportionate to it? I really don't think so. Has their expenses over the year decreasing, or their expenses been sensible? No, the expenses have been really high and they're skyrocketing every quarter or every year. And is it proportionate somewhat to their sales? And the answer seems to be a no. The expenses have seemed to be just skyrocketing and going above the roof every year. And say I think it's somewhat okay and somewhat not okay for a startup or say a emerging company like this. It's really tricky just to judge over it. But the positive sign here is their operating profit has been in on the negative side, but it has been improving over the years. So after say 2020, the advertising cost that they have been taking has been reduced comparatively. Say their profits have been somewhat increasing after say 2020, and they have been working on it. Both Swiggy and Zomato have been reducing the offers that they have been given earlier. Their offers on food or the discount they were giving on their websites were like say 60% and 70% odd. Now that has really been reduced, and they are more on the profit side of it, and they are seeing more profits now. Their operating profit in 2019 was around minus 3000 crores, and now it has reduced to around 1600 crores. That is also negative, but it's somewhat improving over the time. And this is somewhat say common for emerging companies because they spend a lot on say advertising and other stuff. So in the year March 2020, their net profit had reached around minus 2400 crores. Now it's down to around 945 crores. So what I can tell you is they are concentrating on the profit bit of it in their future. At least a good sign comparatively, I can say, from the year 2020 or 2021. So in the year 2022, from the year 2021, they have tried to reduce their liabilities or their borrowing. So they are trying to reduce their debt, and this is a really good part of it. Now let me just give you the pros and cons of this company according to me. Now let me start up with the pros. Now they have been really concentrating on quicker delivery of say 10-minute delivery. Now if this works out, because our people are just wanting things to be very very quick, and they are really really impatient. Now if this model or this business model really works out, then Zomato here are going to make really really good amount of money. Now Blinkit, which they acquired, which has been a loss making company, covers only around 30 cities who they cater. Now there is a very very big potential for them to cover, or Zomato to cover, through Blinkit, because the e-commerce part of it, or say they have a lot of data. Now what I can say is Zomato has a lot of data according to which part of our states or which part of our country needs what, or which area needs what. So they can be really using that part of the data for using Blinkit. And in the future, cloud kitchens have been coming up, and what really can happen is the operating margin for Zomato can really really go up, because their cost of expenses might come down, since the cloud kitchen serve all the food, or say there are many restaurants in one single place, and the food delivery part of it will become really really easy. So what I can see here is the main point is they are now improving on their profitability, and they are now concentrating more over their profitability, because they are done with all the ads. Not done, but they are doing ads, but their expenses on advertisement have been decreasing over the years, and they are not giving away discount just to attract customers. So they will see a lot of more profits coming into their company, just because they are not giving away stuff just at good discounts. Now I really really think that Swiggy and Zomato, at a point of time, if they both have to really work out and they don't want to destroy themselves in the near future, they'll have to join hands. So this is when both the companies can benefit each other, and there is a lot of money to be made over here if they both merge. Instead of say Zomato acquiring Blinkit, if something like say they had acquired Swiggy, now the stock price wouldn't have been 60, it would be around at least say 600. Why do you really think that Zomato and Swiggy would merge? Because they have been fighting over the at least say almost half a decade. Now why do you really think they will merge together? See, the investors in this space are really really struggling, and Swiggy and Zomato both have really frustrated investors, and they have burnt a lot of money. And if they really don't merge together in the near future, they are going to lead the self destructions of each other. This point over here, the next point, is not for the near future, it's for say the coming future after say a decade or so. But what the DGCA has told both the Swiggy and Zomato is they can start trying delivering food through drones. Okay, now if they use drones for delivering, that is where the cost of delivering food will come really really down, since they won't have to be paying their delivery boys, and this is where cost cutting can be really really done. This might not come in next say 2 to 3 years, but in the coming future, say in the next decade, this will be a very very important factor, I really really think. Now let me come to the cons part of it. While releasing the IPO, the owner of Zomato bought his stake from 7% to 5%. Now this is really really worrying sign, because the owner himself seems to have very very less confidence in his own company. So Ashwath Damodaran, after Zomato reaching at the point of say 45 rupees odd, he told that the actual price of Zomato could be somewhere around 30 rupees or 35 rupees, and this was really really worrisome. Zomato has been really really worrisome for me, especially because they themselves as their main business have not been stable over the period of time, and it's not a profit making business. What is really happening is they are going on acquiring say non-profit making companies like Blinkit. They are trying to bring in more business, or say small business for themselves, when their whole main business has not been working out for them. Been making new investments, and they have been making new companies which are not even profit making companies, though Zomato itself is not a profit making company as of now. Now the National Restaurant Association of India has been in talks with ONDC to end the duopoly of Swiggy and Zomato. Why is this really really important? Because ONDC is a company which is backed up by the government, and it's a non-profit organization. So what really can happen is ONDC might not concentrate on the profit part of it, and this is where Zomato and Swiggy can really take a hit when they are concentrating on their profitability. Now let's understand what is the one advantage that Zomato really had. Was they really really knew, or they had the data of what food at which location at what time the demand was there, and what food had to be catered at what time to people they really knew, since they had a lot of data. But what happens with ONDC coming over into the equation over here is, now who is ONDC? They are the open network for digital e-commerce. So this is a platform which can really disrupt the e-commerce part of Zomato. So, and since they can do it at lesser cost, and since they are government backed, the data that Zomato really had for manipulating the prices higher or lower of the food that they really delivered, that power, that major power of Zomato is going to be really disrupted by ONDC. You know the thing with government or government backed companies, and what really happens when things like this come into picture. There is a lot of problem with, say, the efficiency, and with food, efficiency and quality is what really matters. Can they really maintain it over, or they can really perform like, say, Swiggy and Zomato? That is a very big question. So the answer seems to be a no for me, but we'll have to see that when the situation really arises. It is not going to come in, say, like another 1 or 2 years, but I see this happening in the near future, like at least say another 4 or 5 years, in the half of a decade. I really see this happening. So this is why I told that Zomato and Swiggy have a real good chance of merging with each other, and they are going to be one force, and this is where they can really outperform, and this is where they are going to do good for shareholders, is what I really think. Am I an investor in Zomato, and am I going to buy Zomato? I will have a very close look into the price of Zomato. But am I a holder in Zomato? The answer is a no. Will I be trading with Zomato? The answer is a yes. I've already taken few trades on Zomato, and I'll be getting you the trade that I've taken on Zomato in the next video, where I'll be speaking about Zomato in a short time space, what you should be doing with your shares of Zomato, and that is when I'm going to show the trades that I have taken.